I think we are live. Good morning, good afternoon, good day. Just depends on where you are in the world and when you are watching this video. My name is Clara Lyons-DeVaughn, and I am the broker owner of Lyonsview Realty. Our team provides residential, commercial for small businesses and nonprofits, and property management services. Lyonsview Realty, we are here, the Financial Fridays, to help you stay current on those trends that impact your bottom line. So, our goals are to provide you with resources, information, and tips to assist you in making the best financial decisions. Our commitment is to maximize your wealth building power now and in the future. So I'm so glad you tuned in today. Welcome, welcome, welcome. Feel free to like and share this video. Our guests are here as a resource to you. So if you have any questions, you can put them in the chat below. Um, and I have a very, very, very special guest. Oh, please subscribe to me on YouTube. I'm trying to reach a numbers goal. So if you like this video, like it, click the like button, and you can subscribe at bit.ly LVR. That's in all caps, subscribe, and it'll take you right to the page. So we have a phenomenal, phenomenal guest today, Mr. Antrone Daly from Annie Mac Mortgage. And I know some of you have been thinking about purchasing property, or you already have a property and you are just like, wow, maybe it doesn't have this, or maybe it doesn't have that, or maybe I want to upgrade this before I put it on the market. And you quite don't know how to do that or how to get the funds to do that. So today we are going to get into it. And I'm really, really excited to have Mr. Daly here today. And I'm going to let him introduce himself and we'll get to it. Mr. Daly?
Hi. First of all, thank you for having me.
Oh,
I'm so glad you thought of me. So I am very appreciative. My name is Antrone Daly. I am a loan officer with Annie Mac Home Mortgage. I've been a loan officer for a long time. So basically, I've seen most of the things that are going to happen in the mortgage world. I've seen. So that's who I am.
awesome, awesome. And you're with Annie Mac Mortgage. And one of the things that's really interesting, the product that we're going to be speaking about today, this is our Show Me the Money series, because it's really important when you're getting ready to do things to leverage your money and to know where to get those resources to do the things that you want to do. So, when people are thinking about doing a rehab and using financings to do that, not all lenders provide this product. So Annie Mac Mortgage is one of the lenders that does provide a rehab loan. So Mr. Daly, talk a little bit, broadly about what a rehab loan is and what you can do with it.
Okay. Well, the rehab loan, let's say if you're going to be purchasing a home,
Mhm.
the rehab loan lets you buy the house and rehab the house basically with the same mortgage. And
Okay.
what we find a lot of times, what I run into a lot of times is that, especially in the market that we're in,
Hmm.
applicants will go out and they will see properties that they like, and they will come back and say, it was a perfect house, except it only had one bathroom,
Right.
except I didn't like the appliances in the kitchen, except. And what this loan does for you is it allows you to use your imagination as you're walking through the property.
Hmm.
So if you're walking through the house, and I tell them, I've had a few applicants that have, lost, let's say 10 bids, and they are legitimately qualified and they are legitimately, ready to buy, but they have just for some reason lost the bid.
Hmm.
And so what I've told them now, when you're at that point, understand that you can walk into the house and everybody has looked at this house and everybody sees exactly what you see. The worst house on the block. And walk in now with the imagination and say, you know what? this might be the worst house, but I could turn it into the best because I can do this and I can do that using the rehab loan, using the 203K loan, or using the renovation loan. So we can do either or. We just need to figure out which one is going to work for you.
Mhm. Now, what's the difference between the two?
So I have a two. I do the 203K, which is
Mhm.
an FHA mortgage, which
Okay.
means it's basically government backed. And then I do a what's called a home style, which is a conventional mortgage.
Okay.
And the difference between the two could be down payment,
Okay.
could be credit that's allowed, could be, there's and what we have to understand sometimes as buyers is that there's no such thing as a one size fits all mortgage. And
Mhm.
what you want to do is hopefully sit down with somebody who's going to be able to say, you know what, your circumstances say, yes, you're ready to buy right now, but you might want to look at this type of mortgage because your credit score is a little bit low, because your funds might be a little bit low. So with a conventional loan, we're going to be looking at a higher credit score. In most cases, you're going to be looking at putting down minimum of 5%. FHA is going to allow us to do 3.5%. Now,
Mhm.
a lot of times that doesn't sound like a big deal, and it's not. The difference between 5 and 3.5% is not a big deal. But let's say you found a three-family house, and that's the house you want to move into, and that's the house you want to renovate. Well, all of a sudden your down payment on the FHA loan is 3.5%, but your down payment on the three family is 25%. Now, and let's just look at $100,000 loan. That's $3,500 versus $25,000.
Mhm.
And depending on your situation will dictate which loan fits better. So if your credit score is 625 and you're buying this property, it might be advisable to, we want to weigh out all our options and see which program is going to fit you better versus a 700 FICO score. At a 700, you basically have choices that,
Mhm.
we can work around and work through. So credit scores are important.
Gotcha, gotcha. Yeah, we did a whole segment on credit scores, so you can go back, listen to one of the previous broadcasts. We had that girl talks credit on, who really broke it down about the importance of your credit score and how to get that credit score up. But for this broadcast, it's really important. Antron, you said a couple of things that are really exciting because I have clients all the time. Like you said, we walk into the property and there's something ultimately that they don't like. They may love the neighborhood, but they don't like the house, or they may not like, the finishes on the property. And all of those things are things that are changeable. And when we walk into what I call the HGTV house, which is the house that someone has probably flipped, and aesthetically, when you look at it on the surface, it looks like they've done all of the great things that make it look good. It has the granite countertops, it has that. Now the color is creamy gray. It used to be that butter yellow,
Mhm.
but it has the right paint job in it. They may or may not have put down some type of you know finished flooring in the property, so it looks clean and crisp and move-in ready. But you don't know what's under the bones of all of that cosmetic stuff. You don't know if they did the plumbing correctly, or what's under the skirt was done properly. But if let's say I had a client, we were looking in a particular price range and they wanted a certain amount of square footage, right?
Mhm.
And the houses that were all, looked nice, all, had all of the checks, of course, were at the top of the price range. And then when you get into a multiple bidding situation, now that person is priced out of their dream house when that extra money that they're putting towards overbidding for that property. There was another property, the carpets were, an interesting color. And It may not have been your first choice of color, but all of those things with this type of product, they could have gone in. It had the bedrooms, the baths, the same layout, put in and had it exactly the way they want it. And they know now what's under the skirts because when they pull out that wall or if they, upgrade that sink set and look at the plumbing, they know what it is that's going on underneath the skirts as well as the cosmetic look.
Right.
And
And
they have exactly what they want.
and you just hit it. Uh, as far as not having the space, not having. So I'm going to say 6 months ago, applicant was looking forever. I mean, he knew the market, he knew the area, he knew where he wanted to go, but he couldn't, and he just couldn't get to that level. What he was able to do was this: he was able to get the neighborhood he wanted. The house
Mhm.
had the attached garage, and what we were able to do was basically add another level on top of the garage. So now he
Mhm.
gave himself two extra rooms along with the bathroom. So
Wow.
the house that he bought that was a three bedroom property now becomes a 5 bedroom property.
Wow.
And it basically gave him double the equity. Now, you can't say what equity is going to happen. You can't say what's going to happen, how much value you're going to get by doing XYZ, whether it's, but for him, it wasn't even about the value. It was making sure that he had the space and the
Right.
room. So now he has a perfect office that overlooks his backyard
Wow.
and it works for him. So a lot of times when we're looking, and I think that addition for him was like 85 grand.
Wow.
So if you look at what he did, he added the 2 bedrooms. Now you're a realtor, and your applicants, your buyers that are out shopping with you, they know what it costs to go from a 3 bedroom to a 5 bedroom while
Right.
you're out looking. So you're always going to be able to find a nice little 3 bedroom, but it's so much harder for you to find a 5 bedroom in the neighborhoods that you like. So why wouldn't we do certain things like this?
Right. Five bedrooms are hard to find, period, you know.
Right.
They are not the norm. So if you find a five-bedroom house, you're doing really, really, really great. And as you say, for appraised value, adding that extra space gives you more equity down the road. You're going to get that money back. And even just the cosmetic upgrades. Let's say you're not even changing the space, you have an opportunity, to do something different, and have it your way. I call it the Burger King. Have it your way.
Yep.
So now this product is not just for people who are purchasing. If you already own your property, you can do this type of. You can have your dream home as well. You can rehab to dream.
So what we're looking at also too is you're correct. And what we have to understand sometimes is that our properties are, for lack of a better word, are investments for us.
Yes.
And we have to make sure that they are in certain conditions, that we have them up so that they are a true asset. And saying what you just said, my mom's neighbor across the street has lived in the house for, I'm going to say, 25 years. She's been there forever.
Nice.
And she's thinking about retirement.
Uh huh.
And she has a house. And again, the 25 years now needs the upgrades. Actually, she's done this part already. So she said, I'm going to do this and I'm going to want to sell the house, blah, blah, blah. So you start preparing. So last year, she did the refi to rehab the property.
Hmm.
By her doing the upgrades now, then she still gets a chance to enjoy it before she puts it on the market. And she'll get, I'm going to say that the realtor says she'll probably get an extra 50 because of what she did. And these are, when you say these numbers, none of these numbers are written in stone. But what we have to understand is that they add value to your asset. And a
Right.
lot of times when we're doing these things, let me go back for 1 second. What I'm going to say is this: the 203K and the renovation loan, they're great products, but they're like anything else. We have to get prepared to actually do the product, to do the program. Meaning, if you're going to do this, why not start now looking for your contractors? Why not start getting that information in place? Why not start thinking in your head, what is it that I really want in the house? And if I can't find the house that I want that's ready, what condition will I take that house in to do, to get it up to my standards? Now, the K and the Reno, they're just like any other loan product, meaning there's documents that we have to have. There's things that you need to do in order to be prepared. So if you're thinking about buying a house, get ready. And we want to make sure that we have at least a contractor in mind. Start making those phone calls. Don't wait until you have the house and then you're going to start doing these things. Start asking for referrals. Start doing those things that will get you ready, because a lot of times contractors might have ideas for you also, or they might have to. We were working on one project and the contractor said, I see what you want, but we're going to have to turn the steps. And they were able, and by turning the steps from the right to the left, it gave them, it gave them so much extra space that it worked out. So a lot of times what we do is we try to keep everything a secret as to what we're doing. Hell, we need to let everybody know what we're trying to do so that we can get to the spot that we're trying to get to, if that
So,
makes sense.
so you said a couple of things in terms of getting ready. So, to participate in the program, you need to have contractors that you've identified. The buyer needs to have contractors that they've identified for their project, right? So they
Mhm.
need to kind of have an idea, if this is the type of improvement that I want to have done, have an idea of what that's going to cost them um, upfront, knowing who those people are. Is there anything else about the contractor that, when they're interviewing contractors, they need to questions that
You're-
they might want to ask that contractor?
Okay, so your contractor is going to have to be licensed and insured.
Okay.
End of story. No ifs, ands, or buts. They have to be licensed. They have to be insured. If you're going to be doing electrical work, they have to either have an electrical license themselves, or they're going to have to bring in somebody who is a licensed electrician. Same thing with your plumbing. So these things that are put in place are put in place for you. And what you have to understand is that what sometimes we forget is that we normally pay for what we get. So if you're gonna, if you want this house to be what you want, then a lot of times you might need to go with that contractor that comes in and says, you know what, this is why it's going to cost you X more, but this is what I would recommend you do so that we can make sure this is a quality job and it lasts. We all got a cousin Pookie that has come over and helped us out in a pinch. But we know at the same time that he did not clean up. He did not make sure everything worked. He did, you know what I mean?
He
So
didn't he didn't pull permits.
correct. He didn't do anything except what we asked him to do. And
Right.
and sometimes those types of jobs are good, because sometimes in the house that's all you need is this little thing. But when you're moving into it and you're rehabbing it yourself, you want to have a licensed and insured contractor. You want to make sure that you have a licensed electrician. You want to make sure that your plumber is licensed, because there's a reason they have that license,
Mhm.
and there's a reason that some guys don't. So we have to understand that the costs that are involved with that license makes your house a lot better.
Indeed.
Now,
Indeed.
the good thing is you said permits. Your permits, yes, if your job is going to require permits, yes, you're going to have to get the permits. But again, most of the fees that are going to be in your project, you can roll right back in and finance with it. So if you're going to have an architect, you can include the architectural drawings. You can include everything back
Okay.
into it. so that you'll be able to say, this is what I'm going to do, and it's financed right into the program for you.
Gotcha. Gotcha. So, are there any other requirements for that contractor? You know,
Well, yes. Like I have a complete contractors package that we send out to our contractors.
hmm
On that, if you're a contractor, if you're going to be doing a $50,000 job,
hmm
well, if and your contractor's biggest job has only been $10,000, we might run into a problem because guess what? There's different management problems that go along with a bigger job than the smaller job sometimes. So we would say that whatever your job is, we want to make sure that your contractor that you're using has experience in those types of jobs and he has references for those types of jobs because they do call the references. They will make sure that your contractor has done this type of job before and what the outcome of that job was.
Gotcha.
So, there's no way to guarantee that this contractor today is going to be great. But you know what? In the past, this is what he's done. What do they say? There's no guarantee on future.
Right, right. And the other thing I think with the program too is that contractor has to have the financial capacity to do the job.
And that's important because the difference. Okay, so there's two types of jobs that are going to be done. One is called a streamlined K. The other one is a standard K.
Mhm.
Now, with a standard K, your contractor gets gets refunded in draws, which means he starts the job, he does the job. So let's say it's $100,000 job. Your
Mhm.
contractor might spend $20,000 of his funds up front and then ask for a draw, and the money will be reimbursed to him. So he can get up to 5 draws. So every time he hits $20,000, he can get a draw back. We can give him a draw back.
Right. But it's after the work has been completed.
After the work has been completed on the
Yeah.
standard. Now, and it doesn't sound like a big deal until this happens. So let's say a couple of years ago, applicant comes to me, and this is their scenario. Contractor said he would do the job for them.
Mhm.
It wasn't a K. This is before they came to me. It wasn't a K. Contractor said the job was $50,000. He wanted half his funds up front.
Mhm.
They gave him the $25,000.
Mhm.
He took the $25,000 and finished another job. And then he didn't have the $25,000 to complete their job until he got another job so that he could take that money and start this job.
Yeah, he was leveraging other people's money.
Correct.
Yeah.
So
So your contractor needs to be able to upfront the costs to do the work.
right.
Yeah.
Especially on the larger jobs like that. And what ended up happening is we then were able to give her a K. We did we refied her house, gave her the K.
Yeah.
She didn't have to pay anything up front to anybody. And believe it or not, the contractors like it too. Because guess what? The contractor could take half the funds, start the job, and get, let's say, 75% in the job and say, I need more funds now to go back and finish. And the homeowner might not have the funds at that point to give him to complete. So
Right.
the contractors who do the Ks, they understand that, you know what?
They know they're going to get their money.
Great. But
Right.
with the K, the funds are set aside. Now, what happens with a K is that with a purchase, let's say you're going to buy a house for $100,000. I'm only using simple numbers for me, okay?
Mhm.
So we're going to use $100,000.
Okay.
Your rehab is $50,000.
Mhm.
When your loan closes, your realtor and the seller, they will receive their $100,000. The buyer will get their money and they are completely out of it. The $50,000 goes into an escrow account.
Okay.
So it sits on the side. So it's just there until the contractor needs his funds. So whenever he calls, we go in, we give him, and normally within 7 days, he has the check back in his hand. Now, when the check comes out, it has both names on it. It has the buyer's name, the homeowner's name on it and the contractor. So they both have to agree that the work has been done to release the funds.
Awesome. This is really great. So if a person wants to, before they purchase a property, go in and do the rehab, it's a win-win for the contractor because the contractor is definitely going to get their funds, and
Mhm.
it's a win-win for the homeowner because they don't have any funds out of pocket. It's a win-win for the seller because at settlement they're going to get the proceeds from the sale, and that property is going to transfer to the homeowner, and they can start the work that they want to do from that point over. It's a great, 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 great opportunity all the way around for
Mhm.
people to rehab into their dream home and not have to, like, take that money that they're overbidding and go into a less desirable property, but in the neighborhood that they want.
Mhm. And what happens also, and you as a realtor, I'm sure you've seen this before, the seller says cash only. He's only wants cash because that sometimes they know the condition of the property. So
Mm.
if you have a 203K buyer, well, sometimes that lessens the seller's apprehension. And he might say, okay, you're doing it as a K. I know you're buying it as is. We have no issues. Done.
Mm.
So you can always look at it that way also.
That's a
And
great
don't be
point.
afraid of it.
That's a great point. I hadn't thought about it that way. That's a really great negotiating tool to offset, you know, a cash only, type property that needs repairs. It
Mhm.
may not work with one that's already fixed up, but yeah, for one that needs repairs, most definitely. Yeah.
Mhm. It's and what I always try to stress is this: the limits of the rehab loan basically are the limits of your imagination. If you can imagine it in your house, why wouldn't you do it? Now you can take a K, you can take a K and basically tear everything down. And as long as you're using the foundation, you can build a new house right back on top of it. Yeah.
Wow.
So
Okay.
as long as we're using the foundation or part of the other, of the existing property,
Hmm.
yes, why wouldn't you do that? So uh another good story is a four family in Newark.
Hmm.
And
So you
it
can do multifamily with this product. It's not just single family homes.
no, yes, 1 to 4s.
1 to 4s. Okay.
Yeah. So it's 1 to 4s. So if you find a multifamily that needs rehab, that's in the right neighborhood, that's in the worst neighborhood, that's wherever, why wouldn't you consider doing the rehab on it? Because again, my applicant bought in Newark, and you know what you have to have sometimes is vision.
Hmm.
Because she basically, in my head, I'm like, wow, you really stole the house. We put in maybe 100, and I'm going to say 150, because you got 4 units that you had to do.
Right.
At the end of the day, you're able to collect $1,400 rent from each apartment. You're into this whole transaction for $300,000.
Mhm.
It's truly a win-win. And
Right.
she gets to actually live rent free. And the thing about it was, she was actually, let's say, 28 years old. So, when you're young enough to have that vision at
That.
that time, she was able to do it. Now it's been about, let's say, 3 years now. And I got a call from her, and she's looking at now going into a three family to move out of the four. And again, you have these kind of options because you now bought wisely, first of all, and now the equity is there, and it pays for itself. So
It did.
sometimes I tell, some of the applicants, I tell them it's like when we bought our first car. None of us really, I don't know, maybe you, but none of us went out and bought that brand new car off the lot. We
Right.
normally bought a nice little used car.
Right.
We kept that car until we saved up a little bit more. And it's a lot of people that have bought the first house, sold it, bought the second house. You stay there 3 or 4 years, you get your life out, you get your equity, and you get all of the things of living in home ownership out of that house, and then you move on to the next one. Sell it, you take a little equity, and you're able to keep moving up. So the average person is going to stay in the house, what, now 5 to 7 years?
Correct.
So if that's your time frame, why wouldn't you do it so that you're putting yourself in a better position down the road?
Indeed, indeed. Now, on the other side, for people who currently own their property, right, and they want to make it better for their current living conditions, maybe they're having a tough time finding something out there that suits their needs, and they want to keep the property, or they just want to, update it because they've always wanted, maybe a second bath, an additional bathroom, or they're updating it to sell. They want to get the highest market value. What's the process for people who currently own their property with this product?
Okay, it's exactly the same.
Okay.
The good thing about mortgages is that normally they all are the same. It's just a little, it's just a few bells and whistles for each little program that we're going to do. So with the K, it would be exactly 203K refinance is basically the same thing. We're going to need a licensed and insured contractor. We're going to need him to tell us how much the work is going to cost. Now, wait, and I left out one part also.
Okay.
Any job that's over $35,000
Okay.
or that's structural is going to require what it's called a 203K consultant.
Okay.
The consultant, basically, I say it, use the consultant as your job foreman.
Right, the GC, the general contractor.
Yeah, because he's going to walk in. You're going to tell him, this is what I want done. He's going to say, this is what it should cost. And, they have like, I'm not smart enough to understand what they have, but they have like a contractor's blue book. So if this new bathroom goes in, it should cost this much to do. And we can use his numbers to get to your contractor because he does not do the work. He's your GC, he's your overseer. When your contractor calls for a draw release, he goes out, he reviews it and says, yes, the work was done, and signs off on it so that the funds can be released to the contractor. So again, it's not like you as the homeowner are going to have to go out there and say he did this and he didn't do this. Your consultant goes in, he says, yes, the work was done, we will sign off, the funds are released, the check is sent out. So throughout the process, there's safeguards for you as the consumer, and there's safeguards for your contractor also, so that everybody's pretty much on the same page. But again, I would say that you want to make sure that there's no gray area in anything that you want done in the property. You don't want to assume that somebody's going to do a fence around the porch. If it's not written down, they don't have to do the fence. So we want to make sure that there's no gray areas. Whatever is written down is what they are responsible for. So when you are putting these people in place to work for you, actually look at what you're doing. Read the information that's there to make sure that you are getting what you want.
Gotcha. This is really so exciting to me. And this program has been around for a long time, and I'm really shocked that more people don't take advantage of it because, again, you can rehab to your dream home. Whether you're purchasing the property, you can buy something again in that meets your parameters and make it what you want it to be. Or if you're in an existing property and if you've been in it for a long time, or let's say you inherited a property and it's time to put it on the market. A lot of times people do it as is, take a lot less money when, they can do a rehab of some minor things, increase the value and the equity in that property even more and get 2 or 3 times as much for it afterwards.
Right, but let's be clear. This is not a buy and flip type program.
No, it is not a buy and flip.
If you're doing this program, you're gonna have to be there at least a year. You have to keep going, before you're gonna be looking at trying to sell it and things of that nature. And it's owner occupied, so you have to live in that property during that period also.
Yes, thank you for making that clarification. This is not the flip purchase them
Yeah,
for
this is not a flip program.
this is for
This is
people
a
who
program for you to actually for the
enjoy the property, right?
correct.
Enjoy the
But
property. Or if you've lived in a property for a period of time, for a long period of time. Because sometimes people live in their homes and they say, oh, I bought it, and they may have said, okay, at some point in time, I want to redo the floors. And they never do it. Or they say, at some point in time, I'm going to upgrade the kitchen. And they live in a property, and they never do it. So now they're getting ready to sell, and it's that same kitchen or it's that same dated bathroom, and they want to give it a facelift. And I always say, do it for yourself. Don't wait to sell a property to have the property of your dreams. This is a product that you can use. Interest rates, they're climbing a little bit, but they're still really, really low. In the theme of things, it's a great time to, if you're going to do a refi rehab and get the dream of your homes, or if you are looking for a property and you're not finding what you're looking for, but you've seen some properties and it's like, oh God, that was disgusting, or I didn't quite like this, that, or the other, you can have it your way. So for my agents out there, recommend this product to your clients as an opportunity, especially for your picky clients, because you may never find them what they are looking for. So this is something that will have them have what they want, and you can move. Everybody is happy. Or if you're constantly being outbid in this market, look at something that may not have the amenities just the way you want them, but with a little bit of elbow. You can use this product to have rehab to your dream home. So anything else you want to share? So you want to share about the about the product before we wrap?
I would say this: it's a great program. Do not be afraid of it. Make sure that the people, you can always talk to anybody about it. You can always reach out to me. My email, my website is myonlylender.com. So just if you go there, you can always get me an email. You can always just whatever it is you need, you can always get me there. But the program itself, as Clara has said, has been around a long time. And there are a lot of people who specialize in this program. I mean, if you look at almost every HUD property that's sold, it says, it's a 203K product. So we just get those types of loans. And sometimes you look at the HUD product and it might work for you. There's always an option.
Yeah. This is great. This is great. So there are two types of programs. There's the 35K, meaning if your renovations cost under 35,000,
and there's no structural.
And there's no structural damage. You can use that up to $35,000 to do, whatever you need to get done. That's faster. Or if it's over 35,000 with no structural. With structural
or without. It doesn't matter. Anything above the 35, you can eat whatever you need to do.
Gotcha. And with that comes a consultant who's going to kind of be your GC and oversee that product for you and make sure that things are being done properly. So excellent program. What would you say the minimum credit score is for this product? What's the range? Or does it matter?
We're gonna say 600.
Really?
But it's like anything else though. If you come with a 600 score, guess what's going to happen? You're going to get beat up.
Yeah.
You're going to get smacked. You're going to get hurt because it's kind of hard to get to 600. So there's some things that you get.
What's a more realistic credit score?
The best, I would say try 620 opens up all the doors. So 620 is good. 640 is better. The higher the score, the better.
Okay.
But in the real world, 620 is probably what I'm looking for to actually be able to get away with just the basics. If your score is 600, you're going to have to provide a lot more documentation.
Gotcha. But 620, 640 credit score. You can
You're good.
do the rehab program. If what you're looking at doing is under 35,000, like not having carpet would be covered in that under 35,000. Updating a bathroom would be covered in that, under 35,000.
Putting a roof on.
Putting a roof on. Oh, good point. Putting a roof on. Putting in windows. A lot of times
Oh,
people say,
that's
"Oh,
it.
these windows are old." You can replace all of the windows with, you know, way under that 35,000. So there are a lot of things that you can do to have the home that you want, to rehab to your dream home, to get into a property now, and to avoid, um, you know, bidding, bidding or being bid out because the property is not as cute as the other properties. I really appreciate you being here today, Mr. Antron. Please give our guests your contact information again of how they can reach you.
Okay. Again, my website is myonlylender.com. My phone number is 201-486-3200. But just go to the website. You can I'll be able to get you.
Awesome. So thank you, thank you, thank you, thank you, thank you for being here again today. Our guests, for those of you who are watching, are here as a resource for you. So be sure to reach out to Mr. Daly. So whether you're watching this live or you're watching the replay, remember to like and share. And if you have any comments or questions, definitely you can reach out to Mr. Daly or to myself. So Lyonsview Realty is here to be a resource for you. Financial Fridays provides you with the resources, the information, and the tips to make the best financial decisions that impact your bottom line. And we really, really want you to have a Lions View lifestyle. So, what is that? I want you to actualize your dreams into reality, rehab to your dream home. And what that does is that possibility of what's available when your life is in order, when your finances in order, when your health is in order, when your spiritual mindset is in order. There are so many possibilities that are available to you. So I want to thank you, thank you, thank you, thank you for tuning in today. My name is Clara Lyons-DeVaughn. Financial Fridays streams live on Facebook and on YouTube Fridays at 9:30 Eastern Standard Time. But you can watch the replay anytime. And remember, keep living your best life. Thank you.